Let's test it first here. Before, hold on. I'll remind you. Maybe I see test it first.
This is fun. I know. Yeah. This. Là, cứ để cái bật here. That's up. Okay, so just test the sound here. Hello.
Hello. Hello.
Test this.
Hello. Can you guys hear me? Can you hear me? Hello. Can you guys hear me? Can you hear me?
Sure.
Okay.
Don't put it on mute because
Okay, good day, guys. Good day, good day. Let's see. Okay, good day, guys. Good day, good day, good day. I hope we're all good. Okay, same story. So we're analyzing Nasdaq US 100. Okay, and here's today price action, and we're using the same platform. So we're using a trading view. So it's tradingview.com. And as usual, you always have to make sure that when you go to your bottom right, the time zone, you just have to know that you go and tick on New York time. Okay. So the time always has to be New York. Always has to be aligned to New York. It's very important, guys. So the platform is TradingView, and then you come to UTC because it's normally standard. When you come here, you change it to UTC -5, and then you're good to go. Okay, then you're good to go. All right. So what do we have today? Remember, we always say that it's very important for us to know our calendar. It's very important for us to know our calendar, guys. So before you start your trading day, you have to know how your calendar looks like. as in the fundamentals. Which fundamentals do you have? Do you have like your high impact news? Do you have your medium impact news? Because those are the days that we prefer. Because we want some volatility in the market. Okay, so we want some injection in the market. That's why we prefer trading on days where there is high or medium impact news. It's very key. So if you look today, today we don't have much. I don't know which platform you guys use for your fundamentals, but normally use forexfactory.com. So if you go to your forexfactory.com today, you realize that we didn't have any high or medium impact news on the USD. So meaning that the market, well, it was going to move, but it's not. We won't really get like high probability setups, or we won't really get like massive moves or decent moves actually on days like this. So we always advise people to try and stay away from the market. So maybe just do your analysis, or just learn, or just practice, or just back test, or just do something, but don't be taken away to to just trade. It's not all about clicking, guys. You can get in, yes, but it doesn't mean that you have to click every time when you get into your charts. Okay. Sometimes you just have to analyze, you back test your strategy, you see where you can improve. Very important. Okay. Because remember that trading mostly is boring, guys. It's very like there's nothing nice about it. There's nothing nice about it. So I could say that 80% of the time we have to be waiting. So 80% of the time is just you waiting to execute. Okay. You don't want to be that person who just gets in the market and says, okay, I think it's going up, I think it's going down. So let me just execute. If you do that, then you're more like gambling, and we don't want to do that. So we assess, we analyze, and then we wait for our kills on. We wait for our entries. We wait for our high probability entries. Remember that trading is a probability game, guys. It's a probability game. It's a numbers game. I'm pretty sure you prefer to trade where when you know that you've got like high probability chances of you getting it right, or the price going to your direction. Okay. Okay, just to say, so we're not giving financial advice here. So whatever we're sharing, we're just sharing our 2 cents. We're sharing the bit of experience that we have with you guys. This is not financial advice. So when we're teaching here, we're not saying that okay, you guys you have to go and trade this, or you guys have to open positions here, or you have to do something. No, if you're looking for a financial advisor, just get someone who's an expert or someone who's registered, and then they can help you with regarding that, because there's a lot of money involved in trading, guys, and there's some losses involved. So if however you decide to take your trade, that's on your own. Okay. So yes, let's go back to the charts. So like I was saying that today we didn't have any medium to high impact news on USD, and then we were not that active in the market, to be honest with you, because we knew that we're not really going to get that much injection. Because if we can look here, like from yesterday, we're basically just ranging within this wave here. You see this wave from up there to the bottom. As you can see today, that we didn't have like much movement, just moving just within. Okay, just moving just within. So it's really important to know your calendar, like I said, and you should create your checklist, guys. There should be a checklist to say that, okay, so this is what I do at this particular time. Do I have fundamentals today? If you do have fundamentals, awesome. You tick. Okay, what time of the day are you trading? Because remember that with our strategy, we always okay. It's not our strategy per se, but we're using ICT concepts. So for those of you who want to go through his content, you can go through his content and just check ICT concepts. Okay. So with the strategy, we advise that you take trades at specific times. So you're not just going in for the sake of going in. Okay. So you've got your kill zones. So for your futures, so your futures, we're talking about your Nasdaq, we're talking about your US 30, we're talking about your S&P 500. Okay. So we take trades from 8:30 New York time. Hence, we say it's very important for you guys to make sure that your time is always set to New York. So we take trades from 8:30 New York time. And then what normally happens is when the market opens for Nasdaq at 8:30, we're going to get like a move, and then at 9:30 New York time, we're going to get like a stop hunt. So normally the price will just spike. Maybe there'll be some relatively equal lows or some relatively equal highs, or the previous day's high or the previous day's low. That's where the market is drawn to, like most times. So at 9:30, we always have like that kind of a move. So at 9:30, we always have like your always have like your grab, your liquidity grab there, or your tail soup or something like that. Okay. So that's number one, guys. So like you guys, you know that you have to check your forex calendar for fundamentals. Number two, you have to trade within the times, okay, specific times. So we look for entries around from around 8:30 to 11, okay, for the New York AM session, and then we've got the PM session as well. So we wait for wait for lunch. We wait for lunch, and then we take our trades roughly from around 2 p.m. to 5 p.m. New York time. Okay, so that's why it's very important for you guys to be mindful of that, for you guys to keep in touch with the time, because the reason is you don't want to be in the market for like hours and hours without really knowing what you're looking for. So if you narrow the time frame to a certain time, in that way, you know that okay, instead of me looking at my charts from 6 a.m. in the morning until 5 p.m., okay, my entries, I must be able to get them between 8:30 to I'm going to get them between 8:30 to 11, and then for the PM session as well, same applies. So that's why it's very important. Okay. And then now we're looking at Nasdaq, guys. We're looking at Nasdaq. So I prefer doing my analysis from the bigger time frame first. Okay. So you have to go to the bigger time frame first for you to get the overall view, guys, of what is happening. It's very important. You don't you don't just want to jump in like on the smaller time frames, your 1 minute and your 5 minute time frames without really knowing what the bigger picture is saying. Okay. So the bigger picture is very important, guys. It's the one that's going to lead you to say that, okay, so this is what we're doing on a bigger scale. And then when you're taking your trades on the smaller time frames, on your 1 minute, on your 3 minutes, on your 5 minute chart, or so on, you know that, oh, okay. So at least like now I know that on the monthly time frame, I'm bearish. Or on the monthly time frame, let's say I'm aiming for a fair value gap above, or you're aiming for a fair value gap below. So you have the bigger picture. So it's really important. So you don't want to just get in the charts and say, oh, okay, I'm looking at the 5 minute charts and then this is what's happening. Okay. So what do we have here on Nasdaq? So this is a monthly time frame, guys. We see that we took out the all-time high. Okay. We took out this all-time high here. We took out the all-time high at this level. Okay. So we took out the all-time high at this level here. We took out the all-time high at this level here, and then like now we're trading above, and then we're really interested to see what's really happening here, because before then this was our target here, and if you look carefully, you realize that the price always does almost one and the same things over and over again, guys. Okay, over and over again. You realize. So what do we realize here? So before the market took out this previous all-time high here on Nasdaq, what did it do on a monthly time frame? So we see that it went down a bit to test what your fair value gap. So this is the fair value gap. Okay, and why is it a fair value gap? Remember that it's always a three candle setup. Like the tail of the first candle there. Let me just move this a bit. I'll bring it back. So you see where this candle closes here and this one closes here. The tail, they do not meet at some point. So whenever they leave space like this, so that's our fair value gap. Okay, that's our fair value gap. So let me put this back. So these levels are very important, guys. So you've got your bullish fair value gap, which ICT calls it the BC, which is the buy side inefficiency and the sell side imbalance. Okay, and then you've got the bearish one as well, which is the opposite, obviously. So we see that before the market took out this previous high here, it first went down to test this fair value gap, and then it propelled. From this level, it started shooting up, gunning for what? Gunning for this high here. So price doesn't just move, guys. Price doesn't just move. You know, if you're looking for if you're looking for buys, remember you look for buys when the price is cheaper. So you look for buying opportunities at your discount, okay, and then you look to sell when the price is high, and then meaning that you look to sell when the price is at premium. So you work within your premium and your discount for your buying and selling, okay. And the market and the price is always drawn to your previous day's highs, your previous day's lows. Is drawn to your session's high. Let's say like now we're trading New York session, and then there was a high which was formed during the London session. Price is always aiming for that. So it's always aiming for levels for your previous highs or for your previous lows which were formed yesterday or in previous sessions. Very important. So as we can see here that the price is gunning for this high. And on the micro time frame, we now have the bigger picture that okay, so like now price has taken out this high that we're looking at. So what are we looking at now? So what I what I normally say, or what we normally say rather, is whenever the price has done this, it's really important for you to take a seat back and just analyze to see what the price is trying to do. Okay, so when we're at this level here, for all we know, the price might be done with the buy side because it just took out the buy side liquidity there. So it can turn back all the way down and aim for this, or the price can continue going up. But before going up, this is what it's going to do. It's going to retrace a bit into this area there and want to use this order block. This order block. You see these three candles there, they form the bullish order block. Let me try and use a different color so that you guys can see properly. Okay, let me use a different color for this one. So I'm going to use a different color. Okay, let me use that. So this one is for your fair value gap. This one is for your fair value gap. Okay, so there we go. So this one is for your fair value gap. So that's your fair value gap there. Okay, so that's your FVG. And then this one is for your order block. And that's for the order block, okay. And this one is for the order block. Order block. Okay, there we go. So like now, before the price goes up, price doesn't just move. Price doesn't just move. Price wants to go where there's money, guys. So price is drawn to liquidity or it's drawn to imbalances. Okay, so it's either your liquidity or your imbalance. So it's drawn to the two things. It's either your liquidity or your imbalance. So like now on the monthly time frame, we're getting the big picture now. And these are the arrays that we have. So we've got your fair value gap and you've got your order block, and we see that the market has been bullish. Okay. Like now we do have the bigger picture. So like now let's go down to a lower time frame. Let's go down to our weekly time frame and see what the weekly is trying to give us. Okay. Let's see what the weekly is trying to give us, guys. What do we have on the weekly day? What do we have in the weekly? What's interesting? So we see that so far we're bearish, eh? So far we're bearish there, as we can see the candle that, okay, like this is quite interesting. Like this high was taking out at this level here, and we've got another order block there. So what you normally do is you want to do your top-down analysis. So you start from the higher time frame. So you start from your monthly, you go down to your weekly, you go down to your daily, so that you can be taking note of such levels, or you can be taking note of your order blocks. We call them arrays. So you can be taking note of your order blocks. You can be taking note of your fair value gaps. So that's why it's important for you guys to do the top-down analysis. So like now, this is what we have. Okay, so we see that the price is bearish there. And what do we have below that? So below that, we've got our order block. We've got our bullish order block. Okay. There you go. So we've got our bullish order block there. I'm just going to drag this and put it there. So we've got our bullish order block at this level here. So suppose the price is bullish, what would we want to see? So what we want to see here at this level is we'd want to see the price coming down, but it shouldn't close below the dotted line. So the dotted line of this box here is the mean threshold of this order block. So maybe it can spike just below this level, but we don't want to see any candle closing below the mean threshold of this order block. Okay. So now if we get a case, let's say the price that's going down, it gets to this level and the candle closes below the mean threshold, or it actually closes below the order block, automatically we get rid of our buying bias. Okay, because now we're seeing that the market is saying, okay, I'm seeing that order block, but I'm not respecting it. So if the market is destroying such levels, or if it's disrespecting these arrays, the bullish arrays, when it's going down, we know that okay. Now, if I had a buying bias at this level here, I get rid of it. I start looking for selling opportunities, which is very key. So let's go down to our daily time frame. This is what we have on our weekly. The daily time frame is looking good. There we go. So what do we have on our daily time frame? On our daily time frame, what we have here, guys, is we see that okay. So we've been bearish, as you guys can see. You can see that your Monday and your Tuesday have been bearish. Okay. Let me just get rid of these lines. Let me just get rid of these lines so we can be together. Okay. So what do we have there? So this is now our daily time frame. And why is the price reacting at that level there? Let me just get rid of all the lines. Pardon that. Pardon that. Okay, so why is the price reacting at that level? Because we have a bullish order block there. So we have two arrays. We've got a bullish order block and we have a volume imbalance there. Okay. So these are our volume imbalance. We've got our volume imbalance and we've got our order block. So we see that as soon as the price is going down, you see this bearish candle there, guys. You see the bearish candle there. What do you take note of? You see that, okay, the price went down all the way to our volume imbalance. So I'm going to label this. So this is our volume imbalance. Okay. Um, okay, let me do this. This is our volume imbalance. This is our volume imbalance here. So when the price started going down, we see that this candle is bearish. This daily candle, this is yesterday's candle. This was Tuesday the 13th. Yeah, maybe it was symbolizing Valentine as well. You never know, guys. But anyways, okay, so the candle started going down, eh? And then it tested this volume imbalance. And then, like, what you have to know now, what you have to remember is that always the midpoint of these levels is very important, guys. So you see that it did get down here, but it didn't close below the midpoint of this volume imbalance as well, which is very key. So it is indicating. So if you're a scalper, like yesterday we had CPI, I think, or something like that. So if you're a scalper, you can be looking at such, you can be looking for this because you find that with these just this move, if you look at the tail here, if you look at this week, you will see that okay, it's quite a decent number of ticks. You would have made like a lot of money, like from that. Okay, and why did the price particularly fine at this level? It is the volume imbalance. Now, why did it close like the? It is also respecting this order block, this more bullish order block there. It is respecting that. Okay, so this is what we see. So like now we sort of have a picture of what is happening. We sort of have a picture of what is happening. Okay, go to our let's go to our 4 hour or 1 hour. Let's see which one gives us like even a fair picture. Which one gives us even a fair picture? Okay, so this is our 4 hour there, And what do we realize on our 4 hour day? We do take note of okay, these lows here, they're basically relatively equal. It is taken out, but it is just a sharp, it is a very shallow, it is a very shallow run on this one. So we see that okay, so like now we are bearish. You see the bearish move there. You see the bearish move there. Let me delete this. You see the bearish move there. What else can we take note of at this wave? Here I realize that okay, I've got my fair value gap. And what do I have above my fair value gap? Like these two candles here, these two candles here, they form a bearish order block. So I've got my bearish order block there, and I've got my fair value gap. I'm going to label this as well. Okay, hey, it's hot, guys. We have to drink water. You have to stay hydrated. Okay, so these are fair value gap. Okay, so this is what I have on the on my 4 hours on Nasdaq. This is what I have on my 4 hours on Nasdaq, and this is what I'd love to see. So I'd love to see the price actually come into bounce off at that level there. Sorry, my back just okay. So I'd love to see the price coming off to this level, and if I'm bearish, then I wouldn't want to see any candles closing above the midpoint of my fair value gap. Okay, I don't want to see a body closing above. A week can go through, like a tail or a week is permissible for it to go through. Like it's fine, but I don't see any body closing above my dotted line there, which is the midpoint of my fair value gap, of which that's what I'm scouting there. Okay, that's what I'm looking at. And then if we go further down, let me just try and zoom in like on this price action nicely. Okay, there we go. If we look at this, we see that okay, so this is yesterday's price action. This is yesterday the 13th actually. Remember what we always say to you guys, that price, it always aims for liquidity. Why is there liquid in this area here? Okay, let's say if there were people who were buying the market at this level, chances are they're going to put their stop losses just below that. And then also some guys who are breakout traders, guys who say that okay, the moment I see one candle just closing below like this level here, I'm going to sell. The guys who trade that. So that's why there's a lot of liquid in this area here. That's why there's too much liquid in this area. And then there's some guys who trade your support and resistance. Okay, there's some guys who trade your support and resistance. So most guys, when they see this level, okay, the price came the first time, it bounced at this level. It came the second time, it bounced at this level. Immediately, what comes to their mind? What comes to their mind? Okay, this is a resistance area. So the moment the price gets here, immediately I'm going to buy, because this is what happened previously. As we can see here, that previously the price, it came down, it tested. The second time it came down, it tested, it went up. And when it's coming down, like most people are saying, okay, resistance. What do people do at resistance? People buy. People buy at resistance. The moment the price gets closer to this, people buy. So that's why there's a lot of liquid. So price always aims for such area, guys. Such areas are very key for price. So you so those are your equal highs, those are your equal lows, those are your equal highs, those are your equal highs. Okay. Those are your equal highs and your equal lows. Okay, so your equal highs and your equal lows. So your points of resistance, your points of support, you know. So your equal highs, your equal lows. Price always goes for these type of arrays. It always aims for your fair value gaps. So it always aims for your liquidity, or it always aims for inefficiency. So what is inefficiency? Your inefficiency is your fair value gap. Your fair value gap is an inefficiency. Okay, is an inefficiency. So if we have So like here we can see that we've got a sell side inefficiency, which forms a fair value gap, and here we've got a buy side. We've got a buy side inefficiency, which becomes a bullish fair value gap. So price always aims for these guys. So price always aims for your equal highs, for your equal lows. It aims for your fair value gaps. We also use like your order blocks. We also use like your order blocks for take profits, for entries. Same applies. Okay, so it's very important. So it uses like all these that I'm mentioning here. Let's get down. Let's get the order blocks down. Let's get the order blocks down. So it uses the OBs, your order blocks. So you use this. So you use these for your entries. So you use your fair value gaps and your order blocks for your entries, and you also use them for your take profits. It's very important. So let's say like now I was let's say I was selling at this level. The moment I'm selling at this level, I've got a fair value gap here. You see that the tail of this candle, so I've got a fair value gap there. So if I'm selling at that level, I don't want to hold the price thinking that, okay, the price might go all the way down, because the fair value gap is so powerful, it can easily hold your price. Like you see what happened here. Let's say if you're selling at this level and you let your price go thinking, okay, it's going to reach all the way down to this low here, you would have lost on some money. So you use such levels. So you use your fair value gaps, and as much as you use your fair value gaps and your order blocks for entries, you also use them for your exit. You also use them for the take profits. So you can take your partials. So let's say even if you don't close like all your positions at this level here, you can say, okay, the moment the price gets to my fair value gap, I'm closing at least 50% of my position. Okay. Remember, guys, you have to protect your money. As much as you want to make the money, you don't want to donate it back to the market. So you have to fight that edge of being selfish. You have to fight the edge of saying, I wanna grab this all the way. You have to fight that edge. It's very important. So you have to fight it. Don't let it fool you, because greed is an enemy, guys. Greed is a big enemy. So I normally say that just try and have like your targets, guys. Just try and have like target, and you must have like reasonable targets, guys, depending on your account size, obviously. Because let's say if you're trading like $1,000 account, if you're trading like $1,000 account, you don't want to be risking, let's say, 10%, 10% of your 10% of your account in one trade. You don't want to do that, guys. You don't want to do that. Okay. So if you're trading like 10,000, if you're trading like your $1,000 account, like just try and risk like 1%, 2%. That makes more sense. Because remember that the market is a probability game. Probability means like either or can happen. Okay, you're not really sure what exactly is going to happen, and you don't want to lose your account just because of one trade. If you lose this trade, you've got another day. You've got another day to trade, guys. You've got better days. You've got like better weeks coming through. Okay, so that's why I always encourage to close your partials. So if you're in a winning position, if you're in a winning position, excuse me, close your partials, guys. Close your partials. Very important. So that, let's say, even if you were wrong with the overall direction, let's say for that day we are bearish, and you bought for some reason you saw a buying opportunity. Imagine now you let that buying opportunity go all the way up without closing some. If it starts going bearish, then you've lost. You've lost all your money. But if, let's say, when you reach your order block or when you reach your fair value gap and you close 50% of the trades, at least you've got something, you see? At least you have something. Even if the market retraces, like now, the moment you start taking your profits, you move your entry to your break even. You move your stop loss to your break even. So like now you're risk free. Now you're not worried that, okay, the market is going to chow from your money. You're not worried that the market is going to chow from your money. So those are important things, guys. So like now, back to the charts. So this is what we have. So the price always aims for your equal highs, for your equal lows, for your fair value gaps, for your order blocks. For instance, if you look at this area here, let me try and draw this. Let me try and draw this so that you guys get a visual explanation of what I mean by, okay, this thing is doing some funny games. Okay, there we go. So that you guys get a visual explanation of what I mean by equal highs and equal lows. Okay, there we go. So we see that this level, let me take it all the way back actually to this. So we've got this level, we've got this level, we've got this level. It touched it, it touched it. So when people see this, they see a point of resistance. I'm not saying that it doesn't work. Sometimes, but now the problem is, whenever we have levels like this is what price will do. Price is going to disregard all these levels here, all these highs. You see, because most people are saying that, oh, okay, this is some resistance. This is some resistance. We're going to sell. Price is failing to break this, and the guys who are breakout traders, they're saying what? Oh, okay. As soon as the price breaks out, we're buying. We're buying at this level. That's why there's too much liquidity there. There's too much liquidity in such areas, guys. Let me just note this down. Okay, so there's too much liquidity in such areas, guys, and that's what the price always aims for. Okay, that's what the price always aims for. You see, it was taken out here. So people stop losses, whoever was selling here, stop losses were hit, and the guys who had some pending orders, the guys who had some buy orders, their orders triggered. Some people want to let the price run like forever. Eventually, it reverses. That's why you want to try and say, okay, this is what I'm doing. When I get into the market, I'm aiming for so many pips. I'm aiming for so many ticks when it comes to the futures, so that like you get rid of that greed. If you say that, okay, on my $1,000 account, I want to make like $100 every day, or I want to make $50 every day, you have to be content with that, guys. You have to be content with that, because remember that the bigger aim of this is to grow the accounts like gradually, like bit by bit. There's no rush, guys, because what help does it bring you for you to have $1,000 account, and you aim for your $500 profit every day? Eventually you're going to blow your account, you see. But you see, on your $1,000 account, if you're risking about, let's say, $10 or $20 each trade, if you lose, you still have days to trade. You can even trade the afternoon session, or you can trade tomorrow, or you can even take a break like for the week if you feel like maybe it's too much for you, and you wait for the market to give you like some proper and nice conditions. Okay, which is very important. So okay, perfect. So this is what we have. Like I say to you guys, that I'd really love to see price coming all the way to this level here, to this order block. And why this time on this? Remember that earlier on I was explaining to you guys about premium and discount. So whenever you're selling, you want to sell the price when it's at premium, and when you're buying, you want to buy at discount. What do I mean by that? So we're on a 4-hour time frame here. If I look at the wave from this high to this low here, okay, I'm just going to use the Fibonacci for these purposes, guys. I'm going to use the Fibonacci, but you can, I just want to get my levels. Let's see. Okay, so I'm drawing my Fibonacci okay, so I'm drawing my Fibonacci from this high, okay, to this low here. So what do we have there? So we have our 50% mark of the wave. We have our 50% mark. So below 50%, this is basically a discount, guys. This is a discount, okay? And then above 50% of the wave, you've got your premium. So you've got your premium there. So you've got your premium. Okay, so we have this length from this high to this low. We've got our 50% mark. So below 50% is my discount, above 50% is my premium. So when I'm selling, when I'm looking for selling opportunities, preferably I want to get my price. I want to get the price when it's at when it's a premium, which is I want to get the price when it's above 50%. So what you look for above 50%, since we have our 50% there, you start looking from this point, going all the way up, and then you ask yourself, do I have fair value gaps? Have order blocks at this way from there to there? Yes, I do have my order block. Remember, let me just move this so you guys can see this clearly. Remember, I've got my fair value gap there and I've got my order block. An order block is not necessarily one candle, guys. An order block can be a series of three, four, or many candles. Because what an order block is basically, it's a change in the state of delivery. So let's say here, if we're selling and selling, and we have a bit of a slight up move, that's a change. That's a change in the state of delivery, guys, and that's your order block. Okay, the order block. Okay, so it's not necessarily one candle, but it's a series of candles. That's why I'm saying that. So at this level, from 50% to 100, we've got our order block there, and we've got our fair value gap at this area there. So like now, I bring my fair value gap. Let me draw it nicely so it can fit. Okay, so there we go. There we go. So we've got our fair value gap. Okay, we've got our fair value gap here. I'm trying to fit this thing properly. Okay, there you go, guys. So we have our fair value gap now at this level. So we have our fair value gap and we have our order block. So if we're looking for selling opportunities, what do we want to see? So we want to see the price coming. It can come all the way up here. It can even spike through this midpoint of the fair value gap. But I don't want to see bodies closing. Preferably, I don't want to see bodies closing above the midpoint of this fair value gap. It can spike through. I can see the tail, but then the body stays below 50% of the move. Okay, and then this is the area where I look for my entries. So anywhere above 50% is where I look for my entries. If I'm looking for my entries at this level at the fair value gap, I'll go. I don't take entries in bigger time frame, guys. In bigger time frames, I won't go in using the 4 hour time frame. Okay, so the bigger time frame is just to give me the overall view of what is happening on a bigger scale. Okay, it's just to give me that. It's just for me to understand the matter. It's for me to understand the matter in hand. You know, just like when you get into a group of people talking, or it's your friends or whoever, they're having a meeting, they're talking and all that. You don't just want to jump in and start saying things, you know. At first, you want to hear the context of their conversations. You want to sit down and say, "Oh, okay, what are these people saying? What are they talking about?" So, same applies to the market. That's why you go to the high time frame for you to get the overall view, so that you can go to the smaller time frames and take your entries. Okay, so this is what I'd love to see, guys. This is what I'd love to see, as I've been saying that. Okay, I'd love to see the price going up to the fair value gap there, and then I look for my selling opportunities. And then as soon as the price gets here, what do I do now? Now I go down all the way to my 5 minute time frame. To my 5 minute time frame. Okay, so I go to my 5 minute time frame, and what do I have in my 5 minute time frame? Okay, so this is what I have in my 5 minute time frame. Okay, and I just want to explain the time thing that I was telling you guys. Okay, before I go any further, where's the crosshair here, guys? Okay, there's the crosshair. So look what happened, guys. I wanna show you the times. Remember, let me use a vertical line actually. I'll make it a bit thin so that you can see properly. Okay, remember I said that we start looking for trades at 8:30. Okay, at 8:30. So these are our 8:30 candle. Let me see if I can make this thing a bit smaller. Okay, here actually a bit thinner. Okay, yeah, I think it's a bit thinner. It's visible. So we see that this is 8:30 there. So this is where we start looking for. This is where we start looking for our entries. Remember that I say we start looking for our entries at this time, and at 9:30 New York time, a stop hunt normally happens. Let's see. Let's see the candle of 9:30. Where is it? Okay, there you go. So it's this candle here. It's this pin bar. Let's see what the pin bar did, guys. Let's see what the pin bar did there, so that you guys can. Okay, so I'll just draw these levels. You guys, you can see that these levels are they are relatively equal, and these are relatively equal highs. Remember what I told you guys, that the price, it always aims for that. So whatever happens in the bigger time frame, guys, if you've got your equal highs or your equal lows in the higher time frame, it's the same thing that happens in the smaller time frame. And we say price is fractal. That's how we say it. We say price is fractal. And what does fractal mean? It means that whatever you see happening on 5 minutes is the same thing that happens on like 30 minutes, the same thing that happens on 4 hours, is the same thing that happens on weekly. It's the same application basically. So we see that we have our relatively equal highs, and the market opened at 8:30 day. Our kill zones, they start from 8:30 to 11 basically. Let me frame them. Let me frame this, guys, so that you let me frame this so you can get a so we can get a better picture of what I'm talking about. Okay, so I'll say until 11. Oops. Okay, all right, this thing doesn't want to do the things. I'm trying to stop it at this candle 11. Okay, there you go. So within this frame, this is where we look for our trades, guys. This is where we look for our trades, and we've got different styles of trading. Some people they scalp Nasdaq. Some people they prefer swinging. Myself, I don't want to hold price for too long. I don't want to hold price for too long. Okay, so if I don't want to hold price for too long, here's what I would have done at this level. So I've got my relatively equal highs there. We see what my 9:30 candle did. It didn't stop hunt on these levels. It didn't stop hunt on these levels. So as soon as this candle does a stop hunt there, as soon as this candle does a stop hunt there, I can take my entry and make sure that like my take profit, it can be this low or this one here. I know that some of you are saying, but this is like a 5 minute time frame, guys. This is Nasdaq. You would have made something. You would have ate from this level to this low or this one. You would have ate, guys. Okay, you would have had something for the day. You'd have had something for the day because I think Slick took this trade. I think he made about $500 or $600, if I'm not mistaken. So from this level to this level is something, guys. It's something. So it basically depends with the strategy. And then like now when you have this, you can even go further down to your 1 minute time frame. You can go further down to your 1 minute time frame. Okay. You can go further down to your 1 minute time frame. I want to show you the model that we okay. I want to show you the model that we use basically. So what you can do, maybe some of you might not be comfortable taking like entries at this levels to take them there. So what you can wait for is we see that the buy side has been taken here. So this candle took out the buy side and it came all the way down to take out the sell side here. We see that, ne? So what we can do now is we can look at this wave. We can look at this leg from there to there. Okay. And then like now we do the same thing. We look for our premium and our discount. The premium, like your premium is above 50%. I think you can even use this box. Yeah, you don't necessarily have to use the Fibonacci, guys. Just that I'm too used to the Fibonacci, so I'm comfortable with that. Okay. So you can even use this box. You see that this is your high, this is your low here, and this is the midpoint. So anything above this level, anything above and the midpoint is 50% of this wave. Anything above 50% is your premium. So we have our premium there. Okay, we have our premium there, and we have our discount below 50%. So like now, what do we look for? So we look on the premium side because we're looking for selling opportunities. What do we have there? Do we have our arrays? What are we looking for? Do we have a fair value gap? Yes, we do have a fair value gap in this area here, as you guys can see. We do have a fair value gap in this area there, as you guys can see. Okay, so we've got a fair value gap there. What else do we have? So we've got a fair value gap there, and we have our order block. So this is an order block, guys. This is a this is a bearish order block. Sorry. And remember what I told you guys, that as if the price is going there, I don't want to see the price closing above 50% of that order block. You see where the price tend. Do you see where the price tend? It did get to the midpoint. It did get to the midpoint, but nobody closed above the mean threshold of the order block. This is what I want to see. So the moment I see this, I would have taken my entry at this fair value gap. I wasn't even going to wait for it to get to this order block. So I would have taken my sell at this fair value gap, and I put my stop loss above the previous high or this candle. But if you guys are still starting, I'd prefer that you put your stop loss at the previous swing high. This one there. So you put your stop loss there, you take your entry there, and then your first take profit can be this. But you see that today we didn't have much volatility because we didn't have fundamentals. Although the price went down a bit, although the price went down actually, and it got very close to your TP, but it didn't. But if you're one person who says that, okay, you know what, me, I don't want to risk too much. So what you can basically do is the moment the price starts moving, let's say the moment the price is like 30% of your way. So just give me a second, guys. Okay, so the laptop wasn't on the charger. Sorry about that. Okay. So the moment the price gets to these levels, you take your entries. You take your entries, and this will be your first take profit and so forth. So I mean, if the price is here and you're seeing that the price is struggling, you don't have to wait to see what happens, guys. You don't have to see what happens. You know, they say that when you're ignoring the signs, if you ignore the signs, you'll see wonders, eh? And you don't want to see wonders, guys. You don't want to see wonders. If you're seeing the signs that okay, this thing is failing to break this low here, take your profits. You've already ate enough. This is enough. You've had your move. You've had your move for the day. Close it and wait for another day to trade. Okay, close it and wait for another day to trade. Very key, very important. So yeah, I think this is about it. This is about it for today, guys. I wasn't that active because, like I said earlier on, that when I look at the fundamentals, we didn't have like your medium to high impact news. We didn't have your medium to high impact news on the USD. So on days like that, I prefer just chilling and just focus on something, and then yeah, I'm good. I'll wait for a day which is proper for me. I'll wait for a day which makes more sense to me, which has got fundamentals and everything. So I'm not sure if you have any questions. Like if you need some clarity on something and the things that I explained now, or if you feel like you missed on something, or you feel like you want to share something regarding this, please talk. Let's get involved, or forever be silent. Okay. So do we have any questions? Do we need clarity somewhere? So if we don't need clarity, if we don't have questions, this is going to be the session. This is going to be today's sessions. I hope you guys learned something. I hope you're going to practice, and Yeah, good luck and good trading.